Welcome to episode 12 of the Blockchain Immersive Podcast. Today I'm going to finish up the series discussing the different chart types that are available to you when making investment decisions. And we're using, again, the software, the service called TradingView. Today I'm going to cover 4 different chart types. In the previous 2 videos, we covered several, from the bar chart to the candlestick chart to Heikin-Ashi. Today, we're going to be covering the charts Renko, Kagi, line break, and point and figure. This is the Renko chart, okay? And you would just go to TradingView, just click Renko, and this is the type of chart that will appear. Now, this is Bitcoin, okay, on the daily chart, but at this point, you don't even have to worry about the daily because this is a whole different beast from the other chart types that we've seen. So the premise of Renko charts is that instead of calculating time, like every day being 1 day, or if it's a 5-minute chart, every bar is 5 minutes, this is based on how many points the Bitcoin has moved. So each one of these bars is 3,000 points, $3,000 rather. So the premise is once it turns green, you would go long, you would buy it, and once it turns red, you would sell it, or short sell it, or get out of your long position. And you can use other indicators here to make sure that you're not getting out prematurely. Now, unlike the other chart patterns, because it's not dealing with time, you might be following a signal on Renko for a very long time. Like, for example, this buy signal here took place on August 17th, 2020. Okay, and you would still be in essentially until January 21st, 2021. But the price went from 9,077 all the way to, let's just take the low of this, 33,002. So you actually kept a lot of this move. Now, between then and this point, the prices were fluctuating very wildly. So in order to make those tens of thousands of dollars, you might have been in the position where you took maybe a maximum loss or drawdown of like $8,000 or $9,000. So if you have the intestinal fortitude to sustain those types of movements against you, Renko is a very interesting chart type to use, because then you can just sort of stick with it, and hopefully you'll make money on it. But you see, this is, I can show you here where it could be a little bit hairy here. So if you got in on this bar, okay, let's just say you short sold at 5,000, let's see what that price is, 54,069. Before it started coming down, it went as high as 58,000, almost 59,000. Okay, so you would have taken nearly $4,000 or $5,000 drawdown before you got to this bar, which obviously is another $3,000 lower. So that is the disadvantage of Renko, is that you need to have nerves of steel to do this. And but if you do, it can actually be quite worth it. But again, this alone is probably not going to be enough to trade on. You would want to use other tools, technical tools as well. Now, the next chart type is called Kagi. Okay, so you go here, Kagi, and it's the same concept essentially. That it's not calculating time, it's calculating price. So time intervals are completely ignored, and you would just calculate what is the amount of price that you want to keep track of, because you can change this. You can change these moves from 3,000 to 2,000 to 1,000, but the concept is pretty much the same. All right, so basically when it turns green, you would buy. When it turns red, you would sell. And again, you don't want to use these as a standalone type of thing. You would want to incorporate this with other techniques, like, looking at the different support and resistance lines, looking at other indicators, breakouts from patterns. So, you won't look at this alone, but this is a great chart to use if you wanted to apply other tools. Like, for example, we had an overall downtrend here, right? So if we took this trend line and we just drew it down, because it's hitting it here, it's hitting it here, this is a valid trend line, you would go long at a break of this trend line, and that actually turned out to be an excellent trade. So there are many different ways to trade these types of charts, but again, you have to be able to withstand substantial moves against you before you would make a profit. Like, so for example, from here to here looks like a straight line, but in between these points, you could have a huge drawdown. So if you have the nerves of steel, you can use it. Let's look at the next chart. Is called line break. And again, it is a very similar type of thing. It has up bars and down bars like all the rest of them. And it takes place based on the closing price of the previous day, of the previous bar. It's the same type of concept, okay, where time is not really calculated. It's based on the type of price movement. And based on that price movement, these lines would be generated. This is very similar to Renko and Kagi. They're just applied slightly differently. So it's the same concept. Again, trend line break. You would use other indicators for this, but it's a nice way to see these trends, but based on the amount, the price amount that you want. Those three chart types, again, are a little bit advanced, and I wouldn't necessarily use them as your go-to, but it's something to experience. It is something to experiment with. I personally don't really use them unless I'm sort of looking to see how large a price move took place over time. The next chart type is called point and figure. And on Wall Street, when I was working, people didn't understand what it was. So they were like, they just pointed and go figure, right? So this too is similar to the other three, that you're not using time, but you're using price increments. So when it's green, it's up. When it's red, it's down. And it's the same general concept. You would use a trend line, let's say, to capture a move. You would use different indicators, and you would follow the trends in the direction of the X's and zeros. So the zeros are down, the X's are up. And again, it's a little bit obscure. This is definitely obscure, and you would not use this as a standalone chart, but some people do, like this breakout here. Some people will ride this all the way up, and that turned out to be, a $12,000 move. So people do base their trading on this. Again, longer term moves. So if you have a longer term horizon, these four charts actually are worth looking into. Now, I didn't go very deep into these. I just wanted to show you the different types of charts you have with TradingView. In my course on technical analysis, I will go deeper into these. But I just wanted to show you the different types of charts and what's available to you. For me personally, if I have to look at any of these charts, I would look at Heikin Ashi. That's my go-to. Candlesticks and bar charts and line charts, the ones that we dealt with in the last two videos, because they're easier to read. They're a little bit less subjective. Like, for example, here you have to input what is the price movement you want to look for. So whenever the price moves $4,000, that'll be a trigger for a trade. And that's the same for the other three types. Whereas the others are using basically the current prices and nearby prices to calculate. So it's a little bit more current. And it's also more reactive. So if the market drops 1,000 points, you're going to see it. Whereas here, the price may drop 1,000 points to here, and it still wouldn't turn red. So your drawdown could be significantly less on the Heikinashi, the candlestick, the line chart, the bar chart, whereas the drawdown for Renko, Kagi, line break, and point and figure could be more significant. The thing I would tell you, though, about the four that we just mentioned is that they are good to see where prices sort of get stuck. Like you see here, it got stuck here, and you see it got stuck here, and it's actually the same level, almost the same level. So it sort of gives you an idea, okay, where in the future might these prices start getting stuck or start hitting up against and maybe getting some type of resistance or support. So that's what these are good for, but I don't really use them much. So I can't say that I have a ton of trading experience with these four, but the previous two videos I do. Well, that's it for this video, and that was the final video for the chart types. Now, again, I didn't go very deep into them, but I will in my course in technical analysis because these take a lot of time to sort of explain. You might see other videos on it where they're going through it fairly quickly, and they might give you some detail, but I like to go through these things a little bit more methodically. And with that, I will see you in the next podcast.